Hello and welcome to myfinanceteacher.org. Over the last few days, gold is doing really poorly. Just in a few days, it dropped from 1532 all the way down to 1460. But those who have been following my channel are not crying because we have been expecting gold to move down over the last couple of weeks already. We saw these daily cycles in the ongoing intermediate cycle in gold, where the first daily cycle took us from 1280 all the way up to 1440. The second daily cycle took us up to 1550, the intermediate cycle top. And of course, as I mentioned, we did see a counter trend bounce here in the middle of September into the advancing phase of the third short-term daily cycle. This cycle has also entered into the declining phase as well as the intermediate cycle in general. We already see a lower low on gold price, but I think significantly lower prices are still very likely, despite the fact that gold is now at the lower range of these Bollinger Bands, and whenever we break through Bollinger Bands, it's sometimes possible to bounce back up. I don't think it's going to happen this time though. And here are my reasons. First of all, within the intermediate outlook, we're within this declining phase and a drop from 1550 down to only 1460, I think in this case is not enough to give us an intermediate cycle low and make the market ready for another push up in gold price. First, we need to get rid of all of the excitement that there is on the market after a nice rally in gold all the way since May to September. So from the intermediate point of view, a stronger push down will make people less excited about gold. Whoever wants to sell will have sold, and that's when the market will be ready to turn around and give us the next advance of the intermediate cycle. My second reason for why I expect lower gold prices is the duration of the intermediate cycle, which has been going on since late April, early May. Usually these cycles last for about half a year, so we still have probably deep into October or November until we're going to see the intermediate cycle low. Similarly, the third reason is the duration of the short-term daily cycle. They last for about a couple of months. The current one started at the beginning of September, so it's very likely we'll see a short-term as well as the intermediate cycle low sometime in early November. So let me stretch this projection into early November. So for the moment, for the next few weeks, I am bearish on gold. And what are the targets? Well, first of all, there is some sort of crude head and shoulders formation, something like this. The height of this formation from this neckline at about 1485 to the top is about $70. So $70 subtracted from the neckline gives us 1410, 1420 as one potential target based on this head and shoulders measured move. Secondly, the 100-day moving average is close to that target at the moment at 1427. So at least a retest of 100-day moving average is highly likely in my opinion. That would also retest this consolidation area somewhere around that 1420. And thirdly, if we throw in the Fibonacci retracement numbers on this rally we've seen since May to September, we will see that 50% retracement is also close to that number, somewhere at about 1410. Fibonacci tells us that 38, 50 or 62% retracement are the most common ones. 50 being close to some other technical targets is, in my opinion, very likely. And lastly, looking at 14-day RSI, it's far from oversold. At the moment, RSI is above 37. So there is still enough room for RSI to get closer to oversold and maybe even dip into oversold levels before I will be ready to buy some gold or related assets. So for now, we should just sit back and relax, see the action, and wait for a better entry price on gold. That's all for now. Hit that like button. Remember to subscribe to the channel. Leave a comment if you disagree or maybe even agree with this forecast. And good luck in your trades.